Hello, welcome again to FAIRtax Power Radio. I'm Bob Paxton.
Bob Scarborough.
And we are FAIRtax Guys.
Hey there.
Now you say all of the snow and ice is gone there, and you're back to almost Florida-like weather there in Winston-Salem, huh?
Yes, but don't hold your breath because next week, one day, I think it's Tuesday morning, it's sleet and freezing rain and rain.
Well, that's the day this episode is actually going to stream, so we'll have to have a look at it and see what we've got there. But all right.
Into the 60s. So, take your pick. You know how the weather is up here. You never can you settle on one, whether you're going to wear a parka or a heavy coat, and then the other days 2 days later it's in the 70s.
Well, they say in Florida you can have all four seasons in one weekend. That happens. Of course, that's NASCAR season, football season, baseball season. Oh, mercy. All right, well, let's get going here on FAIRtax Power Radio and dig into my favorite segment as we take a look at what the Congress critters have been doing or trying to do to the tax code. In our weekly congress.gov look into what's going on. And what we do, of course, is we go to the congress.gov page, put the words Internal Revenue Code in quotes at the top of the search function in there, hit the go button, and as of the day we're recording this, 1,644 hits returned on that search. And we will start today with H.R. 7222. This is from kind of up in your neck of the woods, Representative Nancy Mason, South Carolina. This is the No Tax on Boat Loan Interest Act of 2026. You got that? The No Tax on Boat Loan Interest Act of 2026. And you dig into it, it's actually got some text in it, and it says this is a bill to amend the Internal Revenue Code to include watercraft as applicable passenger vehicles for the purpose of deducting personal loan interest.
For boats.
Yeah, they want to consider a watercraft, which would be a different kind of boat. So I guess you could use jet skis and stuff like that as well as vehicles for the purpose of, getting some kind of, let's call that text up again. I already backed out away from it. To include watercraft as applicable passenger vehicles for the purpose of deducting personal loan interest. So they say the interest that you pay on your car loan or interest that you pay on whatever for this kind of loan, if you've got a loan to finance a watercraft of some kind, they want the interest you pay on that loan to be deductible from your gross income. That's if Representative Nancy Mace has her way.
Yes, sir. Well,
okay.
Boats in South Carolina. A lot of
they got a lot of boats in South Carolina.
A lot of lakes,
Yep, they got a long coastline as well. Okay, let's keep going. HR 7216. This is from Representative Thomas Keene of New Jersey. And this is the Make American Housing Affordable, or they call it the MAHA. Instead of MAGA, M-A-G-A, it's M-A-H-A, MAHA Act of 2026, Make American Housing Affordable Act. And you'll see, you dig into that thing and you find the text that says this is a bill to amend the Internal Revenue Code to, would you believe it, another tax credit to establish the Housing Affordability Tax Credit.
Well, why not?
Well, why not? Because there are already credits after credits after credits after deductions after deductions after deductions that some people get and other people don't. And that is just not right. Everybody should be treated the same by the tax code. And that is just another way. I guess, obviously, the homeowners will get that break. Renters will not. And it's just another case of how the tax code treats different groups of people differently. Again, probably based on how strong the lobby that represents their interests are. And it's just a rotten system, and it needs to be replaced with a fair tax.
Yes, sir. Absolutely. And we always say that. But when you stop and think about the complexities of the income tax code, you have to have a degree in physics, rocket science, quantum polling and any other type of specialized educational certificate to be able to figure it all out. And it's very confusing, and we need to make it as simple as possible. And the best way to do that is with the FAIRtax.
Absolutely. Moving right along here, HR 7210. This is from Representative Brian Fitzpatrick of Pennsylvania. I like the title of this one. This is the Fuel the Force Act of 2026. Fuel the Force Act. And you see, you dig into that there and you find the text, and it says, okay, this is a bill to amend the Internal Revenue Code to exclude certain income of law enforcement officers from gross income. Again, people are getting a break, and certainly I'm not going to say anything bad about any law enforcement officer. They are definitely probably among the most valuable members of society in terms of the job that they do for us. But they get a break. Teachers don't. The life flight helicopter pilots don't. The truckers that bring everything to your grocery store, some people get a break and some people don't. And again, so certain law enforcement officers, if this bill passes, will not have their certain income counted as in their gross income, meaning it's not taxable. And that's just, I'm certainly, no one respects law enforcement more than I do, but they still shouldn't get a break that other people don't.
Right. And that there again underscores the need for the FAIRtax, which provides across the board fairness for everybody. You want to pay a tax, you want to contribute to the coffers of the federal government, U.S. Treasury, go buy something.
Indeed. All right. Next item up for bids here is the HR 7205. And I do believe I have found the first entry here into the 2026 Tax Proposal Hall of Shame. We will go over at the end of the year. This is the Application Fees Act. Representative Janelle Bynum of Oregon, HR 7205. And it says that is a bill to amend the Internal Revenue Code to permit fees for admissions applications to higher educational institutions, permit those fees to be paid from a 529 plan and for other purposes. Of course, 529 plans, what they've got down here, the Florida Prepaid Education Program. It's another one of those tax-free kind of things. You're allowed to put tax-free dollars away to be used for a certain purpose. And of course, what aggravates the car out of me for these kind of things is that the government thinks that your money isn't really your money until they have extracted their pound of flesh from it. So they're going to claim the right to tell you what you can and can't do with your own money that they haven't gotten their chunk of it out of it for. So that goes away with the FAIRtax. You do not have the government telling you what you can and can't do with money that you haven't paid tax on, because with the FAIRtaxes law, you don't pay tax on any money, period.
Correct.
So you think this one belongs in the Hall of Fame just because of the thinking that's behind these 529 plans or their 401k plans or any of these other tax deferred things. I'll tell you what you can do with your own money because you haven't paid tax on it yet. So your money really isn't your money because I haven't gotten my hands on it yet. Oh, that drives you nuts if you think about it.
It's very presumptuous in thinking. But then, of course, lawmakers in Washington tend to get up there and figure, hey, well, I'm pretty much running the show now. So now that I'm here, it's a whole different ballgame. Only time I'm going to come around and see my constituents, and this isn't true for all elected representatives, but if they can avoid dealing with us directly, then they'll do it.
But for them to think that my money is actually theirs until they've gotten their chunk out of it is just galls my gizzard, as Sheriff Roscoe Pete Coltrane used to say. All right, one more here. HR 7185. 7185. This is Representative John McGuire from Virginia. The Home Savings Act. Home Savings Act of 2026. And let's see, dig in and find the text on this one. And it says this is a bill to amend the Internal Revenue Code to, oh mercy, exclude from gross income certain retirement plan distributions used for a down payment or closing costs for principal residence and for other purposes. Oh, would you believe that? Again, some folks are getting a break because some people will be, buying homes and others won't. But you can use exclude from gross income. In other words, not pay tax on the money that you get out of your retirement plan if you use it as a down payment. Again, that's it. If you have a 401k or something like that, and you take money out of it, that is a taxable event, and government gets its pound of flesh at that point. But they're saying if you get some money out of your retirement plan for the purpose of making a down payment on a home or paying the closing costs or something like that, we'll let you get away with that. We won't call that gross income like we would if you just made a normal withdrawal.
Right. Good stuff.
I'm always right.
Well, of course, and the government is competing with you to be right all the time. It's either or it's going to be the federal government. So I choose you.
Okay, I appreciate that. Okay, that's going to do it for this Congress.gov segment on FAIRtax Power Radio. There is more craziness coming up next week, and we will get into that. But yes, we have got, let's see, check my timer, how much time we've got left. Oh, we got a little over 16 and a half minutes left here, so we got some time to dig into this. What we are doing, we started this last week, and we will continue this next week for sure, and just however long it takes us to get through it. We're in the back of the IRS Go Away FAIRtax book written by Boortz and Linder, and we are all the way in the back of chapter 15. So even back then, they knew when they wrote this book that there would be two kinds of people. There would be people who would be dishonest about what the FAIRtax actually says and intentionally tell you falsehoods and fibs about it. And then there will be other people that just, the concept is so new, they don't understand it. They are suffering from honest ignorance and that they just simply don't understand how the FAIRtax works. So there would be a lot of, objections and questions raised about the FAIRtax. They were trying to address some of these things. And this is one we hear all the time. This is on my page 150. I think you've got the Kindle version. You're a couple of pages ahead of me here. But it says, when I go to the store and buy a $100 coat, is it going to cost me $123? And the short answer to that is, that's your cue.
Oh, I have to turn my Kindle page. No, of course. The longer answer is also no, but it depends on what exactly you mean by the question. If you're asking whether a $100 coat you see for sale before passage of the FAIRtax plan will cost $123 under the plan, the answer is no, because as you'll remember from previous chapters, that $100 price is already inflated by 22% worth of embedded tax. I'll say that again. As you remember, $100 price on a coat is already inflated by 22% worth of embedded tax. The cost of materials, the production, the transportation, insurance, other business costs, and other taxes on the business or the people that are bringing the material
every company, every entity that had a hand in bringing that coat to the shelf has a tax liability, which is included in the price that they charge the next person down the production chain. And it all rolls down to the final consumer anyway. And with the FAIRtax, all of those taxes on business to business transactions are not taxed under the FAIRtax. And so the cost of producing that coat goes way down because the tax costs for all of the businesses involved in producing it and transporting it and getting it to you and actually putting it on the shelf and selling it to you, all those tax costs fall out of the price. So it will cost less than $100 under the FAIRtax. Go ahead.
Right. Okay. If you're asking whether a $100 coat you see for sale after passage of the FAIRtax will actually set you back $123, the answer is no, because the FAIRtax was designed as what's called an inclusive tax. That is,
Mhm.
tax is included in the price of the product. Like when you go fill your car up with gas, the stickers are on the pump that says, here's your state tax, here's the federal tax, and it's in the price. The price that you pay for gas, the same would be for the FAIRtax calculation when you purchase an item. So when you go to the store and purchase an item for $100, the retailer will get $77 and the remaining 23 is paid to the federal government. That's the biggest difference between the FAIRtax and most current sales tax, state sales taxes, which are exclusive. In other words, adding the price of the tax onto the cost of the item. And since our current income taxes are figured on an inclusive basis, that is, they are taken out of our paychecks, not added to them, it was decided to handle the sales tax in exactly the same manner.
Indeed. Of course, and that brings up the next thing that we hear all the time. Oh, wait a minute. I've heard people say that you're not telling the truth. It's not a 23% tax. It's actually a 30% tax. And well, again, either figure is right, depending on whether you're looking at it as an exclusive tax. In other words, you've got $23 of tax added on to a $77 item. And so if that $23 is expressed as a percentage of the 77, it's 30. But if you add 23 on to 77, you get $100 out of your pocket. That's what you're going to be charged at the cash register. And of that $100 that you spend, $23 of it is fair tax. That is a 23% tax if it's based on the total of what you spend, including tax, or if it's based on what it's added to the part that the retailer gets to keep. So it's a moot point. We get that all the time.
Mm-hmm.
So let's try this. Let's see if we can make this interesting. What's the issue here is a mathematical equivalent to a game of semantics, which is correct. But the crux of the matter is the distinction between inclusive and exclusive taxes, as we just mentioned. So that's right. All federal taxes are figured on an inclusive basis. The prime example, of course, would be your federal income tax. Calculate the amount of federal income tax you owe. You multiply your taxable income by your effective tax rate, subtract that amount, send it to the government. Okay, so a married couple reporting $112,000 in taxable income would fall into the 25% tax bracket because 25% of $112,000 is 28. That's how much the couple would owe in federal taxes. But there's another way to figure this out, the tax exclusive way. After paying their $28,000, this couple would have $84,000 left in their bank account. And this is how the critics get that 30% back. They look at that 28 as a percentage of the 84,000, not of the 112, and that's what yields the 30% rate. Yes. So no, we're not being dishonest. We are just you're not used to seeing sales taxes calculated on an inclusive basis. You're used to the 5% sales tax that adds $5 to the cost of a $100 item at the cash register. Right. But no, that's not how that works.
So go to next time you do your gas fill up on your vehicle, ask to print the receipt, get the receipt and look at it, and you'll see here's the total. Here's you pump $100 worth of gas or you pump $50 worth of gas. There is nothing added in. The gas taxes for your state and for the federal taxes are in the price. And that's the same way the FAIRtax works.
All right, I got a question for you here. Hey, isn't the FAIRtax just like the VAT that they use in Europe?
Well, according to the book, they've been over that already. But they're answering it again.
No, go over it again.
Absolutely not.
Until people absorb what's going on here.
It is not a VAT tax. It's not a value-added tax. My goodness. The FAIRtax replaces the income tax, replaces the income tax, takes it out completely. And as a bonus, closes the Internal Revenue Service, and through a companion action, gets rid of the 16th Amendment so that the income tax cannot be brought back again ever. We pray that makes it through the states when the time comes. The VAT
politicians like that VAT.
Oh boy, yeah. The value-added tax is capable of producing huge amounts of revenue while remaining virtually hidden from consumers. When a consumer pays for a product in a country that has instituted a VAT system, value added tax system, he has no real idea how much tax he is paying to the federal government. That, of course, is an ideal situation for politicians, since it's hard to resent a tax that remains invisible to the naked eye. If you can't see it, it's like it's not even there. And the bread and butter items, go up accordingly. Of course, it's a terrible situation for consumers, since the tax is so well hidden and the long line of companies involved in the processing and manufacturing and merchandising. It can easily be increased without undue public scrutiny. When value-added tax rates are increased, it looks just like another increment of inflation to the unaware consumer. Oh, well, eggs just went up. So, oh, well. Milton Friedman, Nobel Prize winning economist, said it best, quote, "The VAT is the most efficient way to raise revenue for the government. It is also the most effective way to increase the size of government."
Yeah. You've got just a central fundamental difference between the VAT, which is calculated and added on throughout the entire, production chain. Every company, every entity that has a hand in producing, distributing a product, has that tax liability. They'll add that VAT as they go along. The fair tax is added just once, one time. It's not, accumulated over the entire production chain. It's applied one time at the point of retail sale. It's an upfront charge. It's not a series of hidden costs. It's completely aware. When you get your receipt, you will see in black and white, or whatever other color the receipt may be printed in, that you will be completely aware of how much fair tax you are paying on every retail purchase you get. And if the politicians increase the rate, guess what? You'll see it. Absolutely, you'll see it. So if you hear somebody refer to the fair tax as a VAT, you can be sure you're listening to someone who has not done their homework and who, for whatever reason, is trying to torpedo the fair tax. Hopefully that won't happen.
Yeah, and people consume news in many different ways now, and sometimes there's opinion pieces disguised as news, and so we have to discern. We really have to stop for a minute and consider where the information is coming from. But for instance, FAIRtax.org has a great library of information about all of the things that we talk about here on FAIRtax Power Radio. And you just want to make sure that you're not making a big decision about the fair tax based on some cursory review by somebody who just happens to have a blue star next to them on the social media that would indicate that there's something special.
All right. Well, I've got time to throw one more question at you here. It says some politicians have suggested to combine the income tax and a VAT as the solution to our tax problems. Wouldn't that be a better idea?
No. Yeah,
why not?
Idea for politicians. Combination.
Yeah, great for politicians, not too good for us taxpayers.
No, we've gone over this before. We'll go over it again. A combination value-added tax and income tax would give you the worst elements of both. The huge compliance costs and invasions of your financial privacy that come with an income tax would still be in place, and fluctuating based on, the political whims of the legislators. The IRS would still be in place. The payroll taxes would still be in place. Business and corporate taxes that flow into the system today would still be in place. Yet, on top of all of this would be the increase in consumer prices that a value-added tax automatically generates. And they also have the lever of the value-added tax under the control of the politicians. There, aren't you ashamed of yourself for even asking that question?
I'm sorry, I didn't. No, that's it. And that's one of the beauties of the sunset clause that's included in the FAIRtax bill that says, of course, obviously a piece of legislation by itself cannot amend the Constitution. But again, the FAIRtax says we do not want to have an income tax on top of the FAIRtax. And so what we're going to do is we will put this little trigger in the FAIRtax that says if the 16th Amendment is not repealed by the normal constitutional amendment process, which takes 7 years, so the FAIRtax says, okay, if the 16th Amendment is still here 7 years after implementation of the FAIRtax, then the FAIRtax just poof goes away. And that does not automatically mean that the income tax comes back. What that means is that the country suddenly has no tax system whatsoever. And Congress will have to come up with something really quick. And my guess is after, 7 years of never filing an income tax return, 7 years of getting your entire paycheck, 7 years of getting a tax refund every month, I don't imagine that it will be politically expedient to try to reinstate the income tax. So should the sunset clause of the FAIRtax ever activate itself, I'll bet Congress really quick would just say, oh, let's extend what we've got here for another 7 years. And again, hopefully we have got to get rid of the 16th Amendment if the FAIRtax becomes law, because we can't have both.
No, and I think once, as you said a minute ago, once people have experienced the revolutionary results that come with the FAIRtax, I really feel that people will, like we say, they'll demand, that this continue. They'll demand, and maybe it comes through, the 34 states have to go for constitutional amendment, or
the amendment has to pass both houses of Congress, I think, with a 2/3 majority. Yeah. And then after that happens, you have to get 3/4 of the states, which adds up to 34 at the moment, to ratify it. So it's not an easy process to amend the Constitution. I mean, that's by design. But right. when people realize that, hey, we're going to have to amend the Constitution to get rid of the 16th Amendment if we want to keep this tax system that lets us bring home our whole paychecks, that lets us not have to file tax returns again, that gives us a tax refund every month. I mean, I cannot imagine, with the FAIRtax being the law of the land, how anybody could possibly, even the most sleaziest politician, could possibly convince people that an income tax would be better. And so, they're going to pretty much demand that the 16th Amendment go away. And if Congress won't pass an amendment repealing the 16th Amendment, then we may have to go the Convention of States routes. But whatever, we are slap out of time for FAIRtax Power Radio again this week. Man, time flies when you're having fun.
Love it.
Indeed. Well, we will see you again, same time, same channel next week here on FAIRtax Power Radio. Until we meet again, I'm Bob Paxton.
I'm Bob Scarborough.
We are the FAIRtax Guys, reminding you the FAIRtax is the only truly fair tax, and once you understand it,
you will demand it.
So, how much will I bring home?
Go ahead.
How much do you make? We'll just say 40,000. Okay, keep it simple, throw out the deductions, all that stuff. So, you got your 40K, right? Now the first 8,000 is going to be taxed at 10%. The 8 to 33,000 is going to be taxed at 15%. And the 33 to 40, of course, is 25%. So that brings your total to $6,345.
Okay, so the average is what?
16%. Okay, and then on top of that, you got Medicare, which is 1.5%, and then of course your Social Security, which is 6.2%. So actually, your new total is $9,405.
Which is
23.65%. You're getting it. You're getting it. Don't even get me started on what the boss has to pay. He's got to pay a portion of your taxes as well, so you don't have to.
Right. And you?
Oh, you'd bring home every penny.